Well, you definitely know about the raging debate around the Finance Bill 2023. Tell you things. I mean, I don't have any proper recollection of any finance bill that has generated so much public reactions or condemnation. And the question is, what is really in this bill that is arcing the public so much? And are there other interesting things in this bill? Because the fact of the matter is, it is not the entire bill that is a challenge. There are definitely some clauses that are really good. For example, cutting down or bringing down excise duty on calling cards and data by about from 20% to 15%. That is good enough, right? Zero rating of LPG gas. That's also something good, eh? So what is the other problem that we are facing with this finance bill? Well, that's the conversation that we just want to have here on BizCheck. And I'm joined by Professor Elizabeth Kalundu. She is a board member of ISPAC, or Institute of Certified Public Accountants of Kenya. She is right here on us. Thank you with us. Thank you very much indeed, Prof, for joining us.
Yeah, thank you, Brian, for having me here.
Thank you very much. And of course, next to Professor Kalundu, we have Walter Mutweri. He is a tax and legal partner at Deloitte East Africa. He's joining us as well this morning. Thank you very much indeed, Walter, for your time.
Thank you, Brian.
I want to start with Prof. Kalundu. What is your general view or feeling about the Finance Bill 2023?
Okay, thank you. The general feel on this Finance Bill 2023-24 is that Mwananchi is feeling overtaxed. There's a lot of outcry. This is because some of the key factors or the key commodities that we use, especially those that need fuel, are going to go up. And if you look at fuel, it actually affects almost all sectors of the economy. There are also some mandatory contributions that have been introduced by this by this bill. So there's a lot of concern because Mwananchi is wondering, at the end of all this, there's going to be less disposable income, which in other words, it means we are going to be poorer than we've been before. Mm-hmm. And probably the reason why there's that concern is that we have a new government in place. There were a lot of promises, there were a lot of expectations. So we feel like the bill somehow falls short of the promises that were made.
Mm-hmm. And so when you look at this bill, I mean, there are more than 25 proposals that are contained in this bill. Which one, when you look at it, which one would you say are likely to impact the public in a very negative way?
Okay, the very first one, and it has been talked a lot about, is the fuel, the VAT on fuel, mm-hmm. which has increased from 8 to 16%. That's 100% increase.
Well, which they want to increase.
Yeah, this is a proposal, so it is it's a proposal. So that is what the government is proposing. So essentially, when that is done, that means that the cost of buying the fuel directly will go up. So when you want to fuel your vehicle, and here I'm talking from even from the point of public vehicles, meaning most likely matatu prices are going to go up. That will mean that whatever we spend on transport will go up. There are also many other levies that have fuel on them, so it means the cost will go up. So basically, the cost of doing business, running our homes, will be very high. So that is an issue that this bill, and especially now me sitting here representing the Institute of Certified Public Accountant, this is a matter that we want to put forth when it comes to a submission. We request for a reduction of that, because it's going to have a very counterproductive impact on the economy, mm-hmm. and the general Mwananchi. Mm-hmm. Yeah.
You see, the fact of the matter is that these are just proposals, mm-hmm. and the National Treasury has called for public inputs, and then the inputs will be factored in the bill that will be taken to Parliament for debate. That is after the budget speech, which is happening on the 8th of next month. And so before I go to Mutwiri, I also want to hear from you. I mean, we're talking so much about the proposed 16%, the introduction of 16% tax on fuel. And it's also good to remember that this is a repricing because, you know, for the longest time, you know, tax on fuel was 16% until it was lowered back in the year 2020 at the height of the COVID-19 pandemic to try and ameliorate the economic situation then. And so is it not proper then to take it back to where it was now that the impact of COVID-19 has significantly subsidized?
Okay, not necessarily, even though maybe that was the direction the government was taking, but there was also the issue of subsidy on the fuel. So the current government is not having subsidies on their budget. It was quite a huge expense. And also maybe looking at the administration of the subsidy, up to now most of the fuel suppliers are still complaining that they have not received the subsidy that they were supposed to get. So in a way, I would not really agree 100% that it should be retained and taken back to 18%, but I'm looking at it from a general perspective because the government should try to cushion Mwananchi and even businesses, but by just the introduction of this actually increases the cost of business. And you've mentioned something about a lot of public maybe outcry or concern or talks around this. Yeah, the reason is that this is the first time that we are having the opportunity to give to have public participating on the bills before it has been taken up by Parliament or discussed to be enacted. And I think this is a good move because as Mwananchi will not be maybe complaining in terms of what actually happened. We have been given the opportunity to make our submission. So, but all in all, maybe as we do these submissions, as the public participate, my plea or my desire would be the concerns that have been addressed by all the parties that will be participating should be factored in, because there's also the worry on the other end. I was looking at today's paper where it seems that maybe the participation is an exercise in futility, so that when the bill goes to Parliament and you see the majority is the Kenya Kwanza side, so it's likely to pass as it is. So the request is that all these submissions that will be made, can the drafters of this bill please take into consideration, so that at the end of the day, the public participation process is actually adding value, not just an exercise in futility. Yeah.
I'll be coming back to you, but now I want to bring on board Walter Mutwiri. Walter, you know, after going through or combing this document, what kind of an analysis or what would you say is the biggest challenge in this document?
Thank you, Brian. I think there are a number of challenges in this bill. First of all, looking at the impact it will have on the common Mwananchi, we call the hustler, starting with that one, going to the business environment and even the government at large. Looking at the common Mwananchi, you will find that the proposals, most of those proposals being put forward, they will have an impact in terms of increasing the cost of living, which is coming when the inflation is quite high. I think as of the last figures that we had as of March, that was around 9.2%, which is quite high, and it's been at that level since towards the end of last year. It's been 9% and above. If you look at that, if you look at what has been happening in terms of general cost of living going up, then that will impact Mwananchi in terms of how much they will have in their pocket for spending. Looking at the same, maybe a Mwananchi who is employed, it will hard hit those who are salaried, because if you look at the proposals being put forward, starting with the National Housing Development Levy, at 3%, in as much as it's capped at 5,000, that still comes in. We have NHF, which is being proposed as well at 2.75%. That's still hitting the same wananchi. And that's 2.75%. It's not capped. So depending on how much you earn, that will come to hit your pocket. Look at also NSSF, which has proposed to go like 4 times high, starting with this financial year. So if you look at those proposals, not to factor in other aspects like the mobile telephone or money transfer charges that are going to go up from 12% to 15%. I mean, the sum total of all those is that the disposable income that will be available to mwananchi will come down, and what that means is that the consumption will reduce, and when the consumption reduces, then economic growth will be impacted, and then that means that then we are not moving in the right direction. Looking at the business environment, I think looking at the small, micro and medium enterprises, I think they are going to be hit the largest, because, or in the greatest way, because if you look at a tax like turnover tax, which is being proposed to move from 1% to 3%, that's significant already. If you look at the way the bill is proposing to increase the number of people who will be in that by moving from 1 million shillings, turnover of 1 million shillings to 50 million shillings, that's being expanded by reducing the minimum from 1 million to 500,000, and also reducing the upper limit from 50 million to 15 million. That's a lot. Actually, if you look at it, it will capture virtually every small enterprise who is called the hustler, and that really now means that they will be squeezed in terms of doing their business. And don't forget that tax is not on income tax. It's not on their income. It's on their sales. So it doesn't matter whether you are making a loss or not, you're supposed to pay tax on that. And it's a monthly tax. So you can see some of those measures, how they are going to impact the mwananchi. They are going to impact the small and medium-sized enterprises, which will certainly affect the greater economy.
Tell me something good about this bill.
Someone actually has to think far and wide to be able to pick something good.
I'm sure you have done that.
Yes. But if you look at majority of them are the ones that are going to impact the mwananchi, starting with those you mentioned earlier, like the reduction of money transfer excess duty. Also LPG, that's going to be actually exempt, not even zero rated. Exempt meaning that the suppliers will not be able to recover their input tax, and that may mean that the tax will not come down as much as would have wanted. But there are also reductions on import declaration fee that was also subject to LPG. That's also being reduced. So that will mean that will help in that front. But the other aspect, for example, the bill proposes to do away with the annual inflation adjustment on exercisable product, which include fuel, which include things like bottled water, like juices and confectionery. So the beauty with that is that will not be increased every year. And that should come as a relief, because if you look at last year, this financial year actually, starting from July to where we are, excess duty has been increased like thrice, starting with the first proposals that came in July last year. We had an inflation adjustment that came to us end of last year, and in February this year there were also some adjustment in excise as well. So when there is a proposal to remove the annual inflationary adjustment, it comes as a relief, so which is a good thing. If you have to look at other aspects like VAT, there is the aspect that, and this could be more on the business world, because there is proposed to exempt VAT on exported services, which is a good thing, because it will help in making our goods and services for export more competitive, because that reduces the VAT, and that has been one of the biggest challenges since this was introduced last year. And thankfully, even the president alluded to this last month when he said they will review this, which is something positive. There is also a proposal to reduce import declaration fee, as well as a railway levy, which comes in as a relief also for most consumers in the country, because it touches on most domestic use kind of products that we import in the country. There is also the aspect of PYE, or rather the employment taxes. There are some clarifications here and there, but they are not as significant as what being proposed. For instance, the levies I mentioned earlier, and also the proposed increase in the rate from that 30 to that 5% for those earning $500,000 and above.
Very good. Let's first of all take the issue of the housing levy, which a lot of people are having a challenge with. And when you look at the National Treasury as well as the government, it doesn't have a shortage of very highly qualified individuals who are in a position to look at picture, the full picture. Yeah, and starting with the CS, for example, he's a professor of economics. This is Professor Njoguna Ndongo. He has been, in the past, he was the governor of the Central Bank of Kenya. He was a member of the National Economic and Social Council. He's an advisor to the president, among other people like David Ndei, who is also an economist. When you also look at the PS in the National Treasury and Planning, he's also a whole doctor of economics, and so it's not proper to say or to try and imagine that the government doesn't have qualified people who are in a position to advise it on some of these issues. And so when you look at the housing levy, and I want to hear from you, Kalunda, do you believe the government is well advised on that issue and its implementation?
Mm-hmm. Okay, yeah, that's an interesting discussion on the housing levy. From my perspective, I think that's a good move. The reason why I'm saying this is a good move is that the government has the agenda of housing. This is an agenda that has also been carried forward from the previous government. So the issue is, how do we fund this? So the government has introduced that levy, which is going to be a maximum of 5,000. It's 3%, but a maximum of 5,000 from both the employer and the employee. And there are mechanisms that have been set in terms of just how will this fund be used. So if you look at what the bill is proposing, it mentions that there's going to be a definition of who qualifies, because currently as it is, everybody will be contributing, even though it is not voluntary. So everybody will be contributing. So the government is probably not trying to work out on modalities to clearly define who qualifies for this. And if it works well and the funds are well managed, I believe that the agenda of having housing, which has been a problem, is going to be actualized. But there's a lot of caution in terms of how that money will be managed. Another issue that touches on the housing development levy is the issue of why is this made a mandatory contribution? I think that is where now there's a contention. So the suggestions that should be there should be that this should be a voluntary, so that those who qualify and those who feel that they want to gain from that can actually opt for that. Just like the way we have we have voluntary contributions towards our pensions. So for me, I believe that the people you've mentioned, these are very qualified people, and probably and I believe that is a good move. Yeah, so maybe the bottom line on this is that this should be made a voluntary contribution, and also the definition of who qualifies for this should come out early so that people might make up the decision. But again, looking at it on the flip side, that brings an additional expense for businesses. So businesses will be having to remit that if you have many employees, so that means there's going to be a huge expense on your end, and we know most businesses are having cash flow problems. Again, if you look at the people who might benefit on this are people who maybe will be working in the lower cadre, so maybe some of them will fall under the SME. So in a way, this is it's something that hits, and also it's a hit and a loss, hit and lose in a way, but the management is what is going to make this levy to actually realize that.
Is that a good move?
Yeah, in my view, it is good, but it has to be, there are some finer details that need to be
so the idea is good.
Yeah,
so what we just need to work on is the administration and implementation of this fund.
Precisely.
Very good. What about you, Mutueri? Do you think the idea of introducing a 3% levy on housing is a great idea?
It is a good idea. It is a good idea, Brian. However, I have a problem with a few things with the proposal. One of them, it's timing. It's coming at a time when Kenyans are being hit from all corners by cost of living, by the proposed changes in the finance bill. If you look at, there are some even bigger proposals, the NHIF that we mentioned earlier, the NSSF that's also coming in. So if you look at that plus other measures proposed that will still go to the same pocket of a Kenyan. So to me, it should have, it's an important and it's a good proposal, but I think it should have come down maybe after a year or two or some time down the line, as opposed to currently, to caution Mwananchi as they possibly take into account the other measures that are coming. That's number one from a timing point of view. The other aspect is the aspect that Prof has mentioned in terms of making it mandatory. And I think we've been getting conflicting messages even from the government by the time it was introduced, in that it was said that it will cover maybe a section of Kenyans, and also it will also be voluntary. But what we are seeing from the bill, it's mandatory. It's set out in mandatory terms. So to me, those are some of the aspects that I would find difficult to swallow when it comes to that proposal.
Very good. Let's also talk about the requirement or the proposals around raising the minimum contribution of National Health Insurance Fund. You know, for the longest time, there has been this proposal. There has been conversation that it is high time that we looked, number one, into the contribution into the NHIF, and number two, the administration and the management of this fund, because we don't have any society that can thrive without a better national health insurance coverage. And so I want to believe that the National Treasury was driven by this realization. And so Kalunda, do you believe that the proposal to increase contribution to NHIF is a good idea?
Okay, looking at the past and how the funds at the NHIF have been managed, this is not a very good move currently, because even with what we are currently contributing, and if you look at the state of our hospitals, they're in a dire state. So in my view, that should not be done. And then the other question is that this NHIF is a contribution that is to be done by everyone, those employed, those who are on self-employment. So if you look at some of the levies that have also been introduced, I feel like it's too much of a burdening, and yet there's no return for this. So if the government can plan on how it is going to be administered, and there'll be no scandals around NHIF, which are currently very many, then Mwananchi will be happy. But currently as it is, we have no trust in our health system. A lot has to be done, even the salaries of the doctors. So this fund, in my view, I don't really support it very much. And maybe just to divert a bit and still come back on medical issues, because the government, the bit in the agenda, they are quite keen on health, on the provision of health care. So in the same bill, they have proposed the issue of the the post-retirement medical scheme, where employees are allowed to save for their retirement, especially on the medical side. So for me, I feel these are two things coming in at the same time. Even though for the government, in terms of the post-retirement medical scheme, what the bill has proposed is that they have it's going to be an allowable deduction, so it is going to reduce your tax liability, which I feel is a good move. But going back to the NHIF, we really need to restructure the whole of the NHIF to ensure that there is value for our money and the health system is going to improve. Yeah, thank you.
What about you, Maturi?
Yeah, I think it's a good idea to increase, but I also have a few problems with current proposals as it stands, because I mean, I will agree, and let's agree that there are benefits coming out from NHIF, and they have been scaling up these benefits, which is a plus, and the number of possibly ailments that they are covering, it's increasing, and they are saying with maybe more funding, they can cover more. That's welcome, because it touches on virtually everyone in every corner of the country, so that's welcome. However, the first challenge that I would have is the larger aspect of managing the funds that they have, and which also has been alluded by my fellow panelists here, because there has been a lot of complaints about maybe how the money is or the funds are being managed. So the issue is that there is the contribution, but is it commensurate with the benefit that are coming out of the same? That's one aspect. Number two is, can we entrust with the amount that is being proposed at the moment? Because if they are having challenges working with what they have at the moment, this one is expected to increase significantly, and therefore there could be worries that the funds may not be challenged in the right in the right route. So it's important that the governance structures at NHIF are scaled up, and the benefits seem to be commensurate with the contributions. And secondly, it would have been helpful possibly to consider a lower contribution, or maybe it can be stepped, as opposed to go all the way to 2.75% of the basic pay. If you remember, the original proposal was 1.7%, but this has been increased by another percent, which is coming at a time when there are many other taxes that are being proposed. Then that's a burden to the ordinary mwananchi. So it could have been considered to be stepped or to be implemented in phases, or increased in phases, so that we have maybe it could be 1%, 1.5%, and then increase over a period of time. And also it would be important also possibly to cap it to a certain level, which can be maybe increased again as maybe the economic situation improves, and we can see that the funds are being channeled in the right direction.
And also the issue of the digital asset tax, which is being proposed at a rate of 3%. And I know that this has been an ongoing concern, throughout with the Organization of Economic Development, championing these, under the erosion profit shifting idea. And now Kenya has gone ahead. It's now implementing these at a rate of 3%. First of all, people are saying that it is going to discourage investment in digital space. Do you agree with this?
No, I don't agree with that. Actually, it's one of the bright spots from this finance bill, and more or less also from a government point of view. Because it's expected to expand the tax base. If you look at it, that's an area that's growing in the digital world and money transfer, and there is no clear policy around taxation of the same. And we are looking at digital assets such as cryptocurrency, where bitcoins come in, and other digital assets, which they are not being captured, and there is quite a bit happening in that sphere. So to me, it's a step in the right direction in terms of expanding the tax base, so that we can have more contribute, especially given that this is where money is moving, and therefore it's the right thing that the government is doing to follow the money. If you look at it, actually, given it's quite a recent development, I think Kenya is the second country to consider taxing these digital assets. I think the first one, if I'm not wrong, is Salvador. So it's a step in the right direction. Let's possibly all share the workload of this tax by let it be a small proportion, but let them come into the tax net.
We're going to be having a conversation around the Finance Bill 2023-2024, which has been floated by the National Treasury, and you are required to make your comment before the bill is headed to Parliament for debate. We are in the company of Professor Elizabeth Kalunda. She's a member of ISPAC, as well as Walter Muturi, who is a tax and illegal partner working with Deloitte East Africa. We're looking at the pros and cons of this piece of legislation and what we need to do in order to ensure that we have the best proposals yet. And so I want to turn to Kalunda. I also want to hear your opinion on the proposals to tax what we call per diem in government, or allowances. Is this a good move?
Okay. Now, the per diems for government employees, for a long time, they have not been taxed. And from the proposal that is coming out, I think it clearly says that it should not be taxed. Okay, because normally when it comes to the taxation of allowances, it is any amount that is above 2,000 that should be taxed, and you have to account for how you spend the money. So the introduction of that deduction, because from what I was picking from the bill clearly says that if you receive the allowance and you're going to spend it, then ideally that should not be taxed if you can account. But again, just touching on the government employees, the issue of any expenses that you incur for you to conduct your job, your work, that should not be taxed if you can actually account for that. I think for me that is a welcome move, even though there's been concern in terms of the issue of how the accounting is going to be done, and if it's not going to be done well, there's going to be a lot of abuse on that. But ideally that should be the case. But again, when it comes to any taxation, there should be a lot of equity. So that seems to be touching on the government employees, which I have no idea why that came into, the discussion came along that. Yeah, so for me, those are the comments I can say around that, the per diems. Yeah, maybe my colleague can add more around that.
Yeah. I think as it's structured, it appears like public employees will be exempt as far as the allowances are concerned, because it's included in a provision that exempt allowances or exempt gains or profit from employment. And that brings the issue of equity, because we are saying it's only maybe government employees who are contributing to the economic growth of this country. Certainly not. And as my colleague has mentioned here, there is already a provision that says if you are given allowances, if they exceed 2,000, it's the amount above 2,000 that should be taxed if you do not provide documentary evidence to show that it was for official purposes or for business purposes. So that one, not so sure what the intention was, if it's really to exempt public service employees. Possibly then it may bring the issues of equity, because other employees may ask, what about ourselves? So possibly that may need to be relooked at.
So there should be some clarity around that issue. What about the proposal to tax human hair, wigs, fake beards, fake nails? Professor Kalunda, I know women are going to be the hardest hit. Yeah. Please, what is your position on this?
Yeah, actually that was a very interesting introduction, considering if you look at the market today, there are so many beauty products that are there, and if you look at items like wigs, especially the human hair, they are quite expensive. So I believe the government, in terms of just trying to increase their revenue collection and also the tax base, they saw that was good. Personally, I would support Even though I know most of the ladies will not be very happy with me because most of the products seem to touch on their women, the only thing I saw that had been taxed under that category was the male mustache. I didn't even know that it is there. So I also didn't know. So that was an interesting one. But essentially, since it is a luxury, I actually would support that because I would only go for that, and especially the expensive ones that now will collect, will have a huge impact in terms of the total tax. That is a luxury. So for me, I am okay. My concern is that anything that is not a luxury, we should be very a bit gentle in terms of the tax that is going to be that they are proposing. Yeah, so I support that. Unfortunately, I know the ladies will not really be happy with me. Maybe the gentlemen also. I think also the demand for this product comes from the men. So we can hear
from Walter. I wanted to hear from you on that proposal to tax human hair, wigs, fake nails, beards. What's your thought on this?
Yeah, it's an interesting one, O'Brien, because it's touching on virtually every Kenyan, because our ladies want to look good. Men also are not left behind. So seems like.
Have you ever seen fake beards?
I've not seen it, but I have heard about it.
Oh, you've heard about it?
Yes. Possibly I need to look for it. I don't have it, and I can see you don't have it. So possibly
because I shave.
Maybe it's something you should consider, having it as opposed to shaving it. Yeah, but I think the main thing really, or the main idea behind it is that the government is looking for revenue, and this is an industry that has experienced significant growth over the last 10 or 15 years. So what government is doing is following the money. This is where the money is. People are spending, our ladies are spending, and of course now we are realizing men are also not left behind, so the government does not want to be left behind.
So are we likely to see a lot of people, opting to go natural? Because I can see you have your natural hair. You don't have the fake nails. It's probably maybe this is we're likely to see a lot of women opting to go natural.
Okay, yeah. On my view on this, I think our women will have to look beautiful. So as Muturi has mentioned, this is an industry that despite the increase or the introduction of this tax, these products will still be bought. So for the government, that was a hit, a plus, because they'll be able to get more revenue. And that is actually the agenda under this finance bill that is there. So that for me is a welcome move. Yeah.
And a lot of people are arguing that for the first time in 5 years, we haven't seen increase in taxes on tobacco, cigarettes, and even alcohol. And a lot of people are saying that instead of taxing our beauty product, this probably maybe should have been the way to go. Muturi, do you believe so?
No, I think also other aspect or other product which are seen to be sin product like tobacco, beer, and all the alcohol and all that, I think they are also being taxed through the excess duty, as we mentioned earlier. Remember, the government even had a proposal, which actually it's a current legal provision that allows the KRA to increase taxes every year from an inflation point of view. So that one is standard.
But that proposal is now being removed under the current proposals.
Yes, but the point I was making is that they have been subject to increases every year. Yeah, and as I mentioned earlier, this financial year there has been 3 instances whereby excess duty has gone up for the sin product you mentioned. So what the government is doing, they are not being exempt still. Maybe the one that will come out if these proposals are passed into law is one for increasing excess duty using the inflation adjustment. But they will still increase it, only that what they are doing now, they are targeting specifically the beauty product that we are discussing here.
Very good. In the interest of time, we have to wind up. Otherwise, thank you very much indeed for finding time to be with us throughout this morning and, of course, a part of this afternoon. Your time is highly appreciated, and, of course, we'll get in touch with you again sometimes in the future.
Thank you.
Thank you very much.
Thank you.
Thank you for having
You
us.
see, our conversation was around the Finance Bill 2022-2023. Elizabeth Kalunda, professor, is a member of ASPAC, and Walter Mutwiri is a tax and legal partner at Deloitte East Africa, joining us here to help us unpack the Finance Bill 2023. My name is O'Brien Kimani. Well, we could go on and on, but time has never been on our side. Kurunzi Mashinani is coming up next. Stay right here. Have a good morning. Have a good afternoon.